FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and well, today is December 11th. I mean, we're getting through this month so quickly. The year is going to be gone. And what has happened here? It's moving so quickly, I can't even believe it. But things are happening in the markets. Well, precious metals, they made their stand for the year. Is that it? Is it over? Where are we heading from here? What about the economy? Credit continues to increase at geometric rates to the point where nobody can keep track of it. Nobody can pay their credit card bills. The pawn shop for banks, meaning the repo market, shot. Fed bailout, QE 3.5, whatever you want to call it. Well, our good friend Bob Hoye is with us now. He really has few equals when it comes to economic history and his ability to digest it and apply it to current matters. If you got a question for myself or Bob, you got an opinion, where do you think these markets are heading? Just email us, kl@kerrylutz.com. Well, Bob, it's great to have you back. So these markets, we've 10 years since the credit bust, as you affectionately refer to it, and we've learned nothing and forgotten nothing. Where does that leave us?
Well, somehow, Kerry, Wile Coyote came to mind. And I remember reading a book about Chuck Jones, who was the director on those cartoon series. And every time Wile discovered he was in space and started to fall, he always fell for 22 frames. Now, how's that for research?
I had no idea. I didn't know that. And
anyways, the markets are crazy. There's 2 levels to it, Kerry. Throughout financial history, you've always had bull and bear markets, and you've had 5 previous great financial bubbles, of which I was the first guy to do the serious work on those. And that the first one was the South Sea bubble in 1720, and it blew out. And as it went up, it changed the world, and when it crashed, it changed the world. But the amazing thing is that on each of those great financial bubbles, since replicated the behavior on the first one. And the trick nowadays is to measure the degree of speculation, and we've had a huge amount of speculation, but it stays elevated for a long time. But on your interest in, of course, my interest too in gold, is that I took the price of gold in senior currency terms. Originally, of course, that was England and London and sterling from 1700, and take the deflated price, and then let it tell me the story about what goes on. But there's a pretty regular pattern in it, is that the real price or the deflated price of gold goes down in a great financial mania. So the last big bull market for gold ran up to 2011, and there was tremendous over trading, excesses, everything else. And the indicator we use then is the silver gold ratio, because silver will, in a bull market for the 2 metals, will always outperform gold. And we use the RSI on it, which is a relative strength momentum thing.
Mm-hmm.
And I think it was April of 2011 when it got up to 92. And we'd noticed beforehand that anything above 85 on the RSI was getting excessive. And there's only once in the past when it got up to 92, and that was in the incredible blow-off in January of 1980. So we pointed out that this was very dangerous, overdone, and everything else. And then I editorialized that, the bear market wouldn't be as bad as it followed 1980. The bear market you're in is always the worst one in history. So where this comes in more recently is that real price, it represents profitability of the gold miners. So in a boom, great financial bubble, you've got energy prices going up, you got base metal prices going up, you got wages going up. So that goes against gold mining. And so this is what has happened. You had a natural bear market for the sector as the bubble was concluding. And then in looking at gold's deflated price, you can say in 2018, it's kind of made a base, but this year it's broken out on the upside. And this is what has happened in all of 5 previous great bubbles before. The real price of gold went down. Gold miners were underperformers. And then the real price goes up. And then you go into what I've called the deflationary post-bubble bull market for precious metals. I mainly favor gold because in the deflationary period, gold will outperform silver. So we are then in the early stages of a terrific bull market, a long bull market for the gold sector. And this, of course, could be long, 20 years. And this would be interrupted by the usual business cycle where from time to time, the orthodox side of the street will be doing well, like the economy and industrial stocks. And then that's be a time when gold and gold stocks will not do so well. But overall, it's the one sector in a post-bubble contraction that will do well. But the problem is that what sets off the rise in the real price of gold is financial contraction. And we've been in a great bubble. And at the moment, it looks like the central bankers have got the power to keep it going. But no, I'm highly confident that the financial markets, the credit markets are the key to this. And you're looking at the yield curve, which everybody was talking about over the last year, and it did invert, whereby short rates are higher than long rates. And that is a sign of speculation within the bond market. But since the curve is no longer inverted, we've seen some novitiates to this say, oh, well, it's no longer giving the warning. I've got the yield curve back, the U.S. yield curve back to, I think it's 1857. So that gives you a lot of business cycles plus a number of great financial bubbles. And the history of the yield curve says once it inverts, you're going to get a recession. Mm-hmm. That's it. It's just the way it works. And so varies. This is what our stance is now, is that the curve has done its thing and it's changing. And when you get going the other way, such as it's going now, it means a contraction. Now then in the credit markets, the other one that everybody watches is the credit spreads, which is the difference between high grade and low grade bonds. And these in a boom narrow because everybody's confident, and then also everybody's reaching for higher yield and taking on risk. Now this has changed, and what we look for is 2 breakouts on the reversal to widening credit spreads. And in the summer we had the first breakout, and then about 3 or 4 weeks ago we've had the second breakout to widening, and this also is a built-in now negative for the financial market. So what we're looking at now is that there's positive things going on out there. They're getting employment numbers that are terrific. The base metal, industrial commodities, base metal prices are firmer than what one would think. And crude oil is hanging in there, where usually you can have quite a washout in crude oil prices going into January on a seasonal basis. So at the moment, there's positive things there that are there, and you can't deny them. But we've been looking for the likelihood of we'll call it the turn of the year rally for the stock market. And those in acronyms come down to TOY, T-O-Y, turn of the year.
Yeah.
And in the past, you've had some terrific markets conclude in this window. The Nikkei on the last trading day of 1989. You had the price of gold and silver on that previous mania. I think it was January 20 or 21st of 1980 when that blew out. And then on the stock market side, the high January 11th of 1973 was at a very important high, and it was followed by the worst bear market since the 1930s. So there is a probability of a speculative thrust concluding in the late December, January window, and it looks like it's working on it here. So our wrap on the stock market, Kerry, is that they were into ending action, potential ending action. The valuations relative to GDP or relative to wages have been as even higher than reached in the dot-com bubble in 2000. And you have now solid changes in the yield curve and in credit spreads that are to the negative. So we're just waiting for this thrust to finish itself off and see what happens in the new year. But to wrap up on the precious metal side, it's working in the favor of gold. So here, for a year ago, on November 1st, I remember that edition, we wrote a special on the gold sector, and we're worried about that fall about liquidity problems being discovered in a soft stock market, which we had, which would bring down the gold stocks, which it did. But anyways, our buy was November 1st, and then the next low was the middle of November. And then using the GDXJ, we had a very nice rally out to July, where then our technical indicators, said this is good. We had upside exhaustions and sequential sells. So the advice then was to take some money off the table, looking for a re-entry point somewhere late in the year. So this is where we are now. We have virtually everything in for a major bull market in the gold sector. And what we're just looking for now is the next opportunity to commit more funds to the gold shares. I think the game's going to be terrific.
Yeah, and you think this is really going to be a big move, and it'll be a protracted move, huh?
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. The project has tremendous expansion potential as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
A lengthy move and with a lot of speculation in it. Hey, the markets are markets. And even last year with the lows, you had senior stocks outperforming first, and then eventually exploration stocks like GDXJ got on game. And it'll probably work that way again. But I do favor, in a bull market for gold, the exploration side, because you can make some huge gains that way. But one's portfolio, you're wise to, on weakness here over the next month or so, to be accumulating some of the more liquid ones, and with an eye to getting positions right down into exploration stocks. And the game in the exploration side can be outstanding. So it would be, Kerry, a broad bull market for the gold sector. And then at times, periods of terrific speculation, there'll be discoveries and everything. And you have no idea how I'm looking forward to it.
You and me both. It's been a long time coming here, for sure, Bob. Yeah. Long time. I mean, 9 years we've been in this, going on 8 years in any event, but really 9 years.
That 2011 high was so dramatic. And fortunately, our technical tools worked for us. And they got us in last year in November, and we lightened up a little. And the re-entry point here, we'll be able to identify it when it comes along. And the point is to be fully loaded as these pressures on the gold sector conclude. And as I say, Kerry, I think we should be pretty confident at identifying those opportunities as they come along. And then also there's, the street's pretty good. They've got some very good mining analysts out there who are very good at keeping track of the individual stocks. And so you've got what we work on is major opportunities in the gold sector on like using indexes. And then there are analysts that are very good at selecting opportunities within individual stocks. So we've got a lot of fun to look forward to.
Yeah, well, I personally can't wait. It's been a long time coming. Well, I think we'll leave it at that, Bob. Bob, we want to check out your work and follow you. Where's the best place to find you? What do we do?
Yeah, just do bobhoye.com or just even my name, Bob Hoye, Bobhoye, on the internet, and it links you into our system. So, and we would welcome anybody to take a look at the record.
All right, there's a link in the show notes for your convenience. Bob, really appreciate it. Hey, what do you think of what Bob had to say? You think we're in this next upcoming credit bust recession? Where's that going to leave gold? Where is that going to leave your stock investments and your bond investments? Email us kl@kerrylutz.com, Twitter feed @kerrylutz, Facebook page is financialsurvivalnetwork.com. I should say that's the website. Facebook page is Financial Survival Network. Bob, we'll talk to you again real soon. Thanks for stopping by.
Good, and have a good Christmas.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.